Welcome to the audio press release, APR, powered by IBN. This original production delivers market and sector insights, as well as executive interviews with innovative executives shaping the future in fast-moving industries, and may feature a client partner of IBN or one of the 75-plus investor-focused brands within IBN's dynamic brand portfolio. As multifaceted financial news and publishing company, IBN leverages its extensive distribution network, utilizing multiple proprietary corporate communication tools to introduce both public and private companies to a vast and diverse audience of investors, consumers, influencers, journalists, and other targeted segments of the public. IBN may have received compensation to produce this audio content. Please be sure to read IBN's entire disclaimers for full disclosures. Network Newswire presents The New Gold Rush of the AI Era. This article has been disseminated on behalf of ESGold Corporation, which may include a paid advertisement. Artificial intelligence, AI, runs on gold and silver, the same metals found in every chip, data center, and iPhone. Yet global reserves are refining capacity and tightening faster than demand models can adjust. Silver is the irreplaceable conductor, woven through photovoltaic cells and high-speed interconnects, while gold remains the corrosion-proof standard in connectors, bonding wire, and high-reliability electronics. In 2024, technology demand for gold climbed to roughly 326 tons, up 7% year over year, which equates to about 10.5 million ounces consumed by industrial and electronic uses, according to the World Gold Council. As the demand base widens with AI hardware scaling globally, ESGold Corporation, Canadian Securities Exchange ticker symbol ESAU or ESAUF on OTCQB, enters the picture with a plan tailored to serve this deepening pull on gold and silver through a fully funded, fully permitted project designed for near-term cash flow and long-term growth. The company joins an impressive group of both producer and user companies, including Amazon.com Incorporated, Apple Incorporated, Microsoft Corporation, and Alphabet Incorporated, that are playing key roles in the global chain that transforms mined metals into indispensable materials for modern technology and electrification. Disclosure: this does not represent material news, partnerships, or investment advice. ESGold positions its flagship Montauban Gold-Silver Project to deliver near-term supply without multi-year permitting or financing overhangs. ESGold's model inverts the traditional model by targeting early revenue from tailings reprocessing to self-funded exploration while cleaning up the environment. By concentrating on already mined, historical material, ESGold has stripped away layers of typical exploration risk, including uncertain discovery, extended timelines, and capital drag, while preserving geological upside across the district. ESGold reports that advanced 3D geological modeling of the Montauban district is near completion, integrating geophysical and historical datasets to illuminate deeper targets and potential new discovery. A few pre-production companies can credibly claim to be fully permitted, fully funded, and advancing on schedule. That scarcity is part of the ESGold argument. AI build-out makes metals the bottleneck. As the data economy accelerates, the limiting factor is no longer software innovation but the physical supply of metals that make intelligence tangible. Goldman Sachs research projects that global power demand from data centers will rise by as much as 165% by 2030 versus 2023, reflecting a rapid build-out of high-density AI-optimized facilities. The scale-up cascades into servers, switches, and accelerators packed with gold-plated contacts and silver-rich soldiers, all components whose reliability depends on those metals' unique properties. This is not a marginal change. It's an infrastructure wave that elevates materials from background cost lines to front-page risks. In simple terms, when supply gets squeezed, manufacturing demand cannot pause, so tech companies will pay up and scramble to lock in materials. The pressure is visible beyond forecasts. U.S. utilities have begun reworking growth plans around AI-driven load, while analysts warn that consumption from data centers will more than double globally by 2030. Even in the spot market, tightness has flared. In October 2025, Reuters reported a silver liquidity squeeze in London severe enough to justify air freighting bars, with lease rates spiking as prices hit records before modestly easing. For manufacturers, these signals translate into procurement urgency, not optionality. When interconnects must be gold-plated and soldiers must be silver-bearing, production lines cannot simply delay shipments until inventories normalize. Electronics and clean energy add persistent pull. World Gold Council data show technology demand for gold at 326 tons in 2024, approximately 10.5 million ounces, while the Silver Institute reports industrial silver demand at a record 680.5 million ounces in 2024, the fourth straight year of structural market deficit. In parallel, smartphones alone embed meaningful volumes of gold, with a typical handset containing about 7 to 34 milligrams. At roughly 1.4 billion units per year, phones are a steady, non-cyclical sink before considering PCs, servers, and network gear, along with the added pull from investment demand. The culminative effect is a tighter material stack that increasingly defines the pace and cost of the AI, EV, and solar rollouts. Clean process production ready. All boxes checked. Against this backdrop, ESGold positions its flagship Montauban Gold-Silver Project to deliver near-term clean supply without multi-year permitting or financing overhangs. The project is fully permitted and fully funded to complete construction in Quebec and remains on schedule, with building completion targeted for late 2025 and first production anticipated in 2026. For investors, the combination of permits in hand, capital in place, and construction advancing eliminates several of the classic execution risks that can stall otherwise attractive project. The Montauban approach is anchored in clean tailings reprocessing rather than a long greenfield mine build. By focusing on previously mined historical material and a clean, scalable flow sheet, ESGold seeks to shorten time to cash flow while maintaining upside to further district development. Recent company updates also note ongoing installation and commissioning steps for a Merrill-Crowe circuit and an on-site gold room and lab, practical indicators that construction is converging toward operations rather than remaining at the conceptual stage. Crucially, the funding story is not a single event, but a runway. The company's September 2025 update emphasizes full financing to finish Montauban and to advance a validation initiative in Colombia. In a market where many juniors remain capital constrained, a clear line of sight to commissioning is a competitive advantage, especially when end users across technology and energy are increasingly sensitized to material security and looking beyond traders to source credibility and continuity. Turning tailings into revenue, expansion capital. ESGold's model inverts the traditional high capex, low margin model by targeting early revenue from tailings reprocessing to self-fund exploration while cleaning up the environment. That philosophy is backed by an updated preliminary economic assessment, or PEA, outlining robust project economics, an after-tax internal rate of return of about 60%, a payback period of under 2 years, and an after-tax NPV at a 5% discount rate above 24 million Canadian dollars based on stated price and recovery assumptions. While a PEA is preliminary by definition, the figures frame a project where capital cycles comparatively quickly back into further growth. And in the current market, that sequencing matters. Hardware OEMs and energy developers are contending with long lead times and rising costs. Suppliers that can bring incremental gold and silver to market in 2026 without waiting for multi-year builds are strategically differentiated. Cash flow provides optionality. It can support step-out drilling, regional consolidation, or modular capacity increases with less dilution, strengthening the project's resilience through commodity cycles. The focus on tailings reprocessing also aligns with policy and customer preferences for low-impact supply. Reclaiming historical materials through an efficient circuit can reduce permitting complexity relative to new pits, limit waste footprints, and generate sellable metal with a cleaner narrative, attributes that downstream buyers increasingly weigh in contract negotiations. As buyers across tech and renewables sharpen ESG criteria, cash flow first intersects with responsible supply, broadening potential offtake discussions. Modular growth in market starved for metal supply. By concentrating on already mined historical material, ESGold has stripped away layers of typical exploration risk, including uncertain discovery, extended timelines, and capital drag, while preserving geological upside across the district. The company's updates note that Montauban is fully permitted while construction is advancing. Those operational milestones reduce the uncertainty bands that can keep financing costs elevated and valuation multiples compressed. A project that is both permitted and funded is rare in the pre-production cohort, particularly in a materials market tightening on the demand side. Scalability is a second layer of the thesis. Tailings reprocessing is inherently modular. It can be replicated across additional sites as skill, data, and relationships compound. ESGold has said it is actively evaluating opportunities to extend its tailings to cash flow platform across the Americas, a strategy that could layer on throughput and revenue without proportionately increasing risk. That playbook can be attractive to end users seeking diversified sources and to financiers who prefer repeatable unit economics to one-off projects. Market timing enhances the appeal. Silver's industrial demand reached a record 680.5 million ounces in 2024, while the market logged a fourth consecutive structural deficit, a combination that suggests industrial pull is not transitory. For gold, the World Gold Council attributes the 2024 technology sector gains partly to AI and electronics. In an environment like this, a de-risked near-term source of supply can capture favorable pricing and offtake dialogue while competitors remain years from commissioning. Exploration momentum builds across Montauban. Parallel to construction, ESGold reports that advanced 3D geological modeling of the Montauban district is nearing completion, integrating geophysical and historical datasets to illuminate deeper targets and potential new discovery. The company also highlighted technical work indicating large, continuous geological features extending to roughly 1,200 meters, a scale that speaks to district potential rather than a single, narrow zone. These are the kinds of subsurface insights that can recalibrate a project's exploration strategy and expand the long-term production envelope. Earlier communications referenced passive seismic and related imaging techniques, helping to refine the structural model at Montauban. The goal is clear: transition from a tailings-anchored starter operation into a hub-and-spoke system that includes new feed sources identified through modern mapping and drilling. Notably, the company has discussed systematic exploration planning and permit preparation running alongside construction, ensuring that the drill bit can follow the model without administrative lag once operations begin. This balance, near-term production with concurrent exploration, differentiates ESGold from juniors locked into long-dated builds. Investors are often forced to choose between cash flow and blue sky upside. Montauban aims to deliver both, sequencing revenue first and then targeting scale. If even part of the deeper target set converts into resources, the platform for a multi-year district story strengthens. If not, the base case remains a permitted, funded operation monetizing tailings in a tight metals market. Mix of readiness and reach. Scarcity concentrates value. With AI, EVs, and solar adding persistent pull on precious metals used in electronics and power gear, supply tightness can move from a commodity market abstraction to a line item pressure on OEM earnings. The Silver Institute underscores this picture with 4 straight years of structural deficits, while spot market events such as the London squeeze show how quickly inventories can feel thin when industrial and investment demand synchronize. For companies that can add supply with low capex and show paybacks, the setup favors a valuation catch-up as commissioning nears. Few pre-production companies can credibly claim to be fully permitted, fully funded, and advancing on schedule. That scarcity is part of the ESGold argument. The updated PEA outlines economics with a sub-2-year payback and a roughly 60% after-tax IRR based on stated assumptions, while construction updates point to commissioning steps in motion rather than pending. As AI and renewable infrastructure expands, the materials bottleneck is becoming impossible to ignore. For institutions and family offices, a 2026 production asset in a leading jurisdiction with a scalable reprocessing design offers a rare form of leverage to that trend. The broader thesis ties back to the opening premise. AI, electrification, and solar are increasingly materials stories, not only technology narratives. Gold and silver are not simply investment hedges. They are critical inputs for the electronics and energy infrastructure now scaling worldwide. Rising industrial demand and long development timelines are steering investors toward mining companies able to deliver early cash flow and reliable gold and silver supply to a hardware sector increasingly focused on sourcing security. ESGold stands out in that smart cohort. Its Montauban Gold-Silver Project is fully permitted and fully funded, in the final stages of construction and targeted for production in 2026. With exploration modeling and planning advancing in parallel, Montauban offers a de-risked dual-track opportunity that blends near-term cash generation with the pursuit of district-scale upside. The audio press release, APR, is an original content production powered by IBN, a multifaceted financial news and publishing company that delivers next-generation corporate communication solutions. Utilizing proprietary corporate communication tools such as news aggregation and syndication, social communication, and brand awareness techniques, among others, IBN introduces both public and private companies to diverse audiences to enhance reach and recognition. IBN may receive compensation for services and solutions provided to its client partners. The owners, officers, and directors of IBN or financial analysts mentioned in this production do not hold any position in and do not intend to trade the securities in their own accounts. This production is not an offer or recommendation to buy or sell any securities that may be mentioned in this production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries inherent investment risk. Listeners should review the company thoroughly with a registered investment advisor or registered stockbroker. This production by IBN is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources, but not verified nor guaranteed by IBN as to completeness and accuracy. Such information is subject to change without notice. Please read IBN's entire disclaimers and disclosures at www.ibn.fm/disclaimer. Thank you again for listening to the audio press release APR powered by IBN.